So hello to everybody watching on YouTube. We are recording an interview. I'm interviewing Kristi Stone today about the Employee Retention Tax Credit, ERTC or ERC, depending on who you're talking to. We use all kinds of different language for it. But the reason I wanted to do this, I've done other videos. So some of you have seen my other videos on this tax credit, which is a COVID tax credit related to payroll. And it is a fantastic one. And it is something you can still get, which we're going to talk about here in a minute. But I wanted to get Kristi on here. Some of you may have heard of Kristi. She is a preferred vendor of mine. And I refer, since I don't do service work myself, directly one-to-one with people, Kristi does. So she'll tell you a little bit about how you can get a hold of her at the end of this if you want her help specifically with your ERC credit and claiming it. And we'll give you all that information at the end. But I want to have Kristi on here because she's been working directly with clients on the ERC. So I figured it'd be great to bring her in here. I can talk about a lot of it from a theoretical standpoint and from the guidance standpoint, but Kristi can talk about what people are really seeing in practice. So that's why I wanted to bring her on here today. So give us a little intro for you, Kristi.
Sure. Yeah. So I have been helping small businesses with the Employee Retention Tax Credit really since it became sort of a widespread or widely offered program. So they really expanded it last January of 2021. They stated that it would apply to businesses who received a PPP loan. And at that point, I started helping small businesses understand the ERC credit and then also determine whether they qualify. And then if so, how much they might qualify for.
Yes, exactly. So at the beginning, we all kind of ignored ERC a little bit because PPP was really happening at the time. It was the most pressing issue for most people to get cash in their hands quickly. So we kind of put it aside, and then they changed the rules. And this was one of the questions I was going to ask, but we can talk about it now, right? Yes, if you got PPP, you can still get this. So a lot of people still are functioning sometimes under old understandings where you might have looked at it a while ago and put it aside because you got PPP. But yes, you can still get this even for the same quarters that you got PPP for. So let's take it back and real quick talk about, just so that we can weed out if somebody's watching this and they're not sure if this would apply to them. Let's talk about who this applies to. And it's a payroll tax credit, right? So first and foremost, you need to have payroll, right?
Yes, exactly. And you need to have non-owner wages because one of the keys that the IRS has come out with is that owner wages are not eligible. So as long as you have non-owner employees, you are potentially eligible.
Yes.
And then you can qualify in one of three ways. So the first is a gross receipts drop. And that gross receipts drop varies by year. So I would just recommend people go back and watch Jamie's video. I think she walked through those specific requirements, but you have to have a specific drop in 2020 and then another drop in 2021 to qualify for 21. If you don't have a gross receipts drop, you can qualify under partial suspension guidance, which is basically where you need to have a government mandate in place that prevented you from servicing your customers by greater than 10%. So this often applies to people like fitness studios, restaurants, anyone who had a government order that they had to adhere to that impacted their ability to service their customers.
And we do have lots of videos on these specific. If you want to know more specifics about the requirements, there is a whole playlist for ERTC. I would start with the most recent videos because it did change over time. And if you don't have it, I'd also make sure that you have grabbed my ERTC calculator. It will help you figure out if you're eligible under those first two circumstances and how much you might be eligible for. You can actually do the calculation within it. So jamietrull.com/ERTC. It's super low cost. It's helped. We've had thousands of people at this point grab this thing.
It is so helpful. Yes. And it's especially helpful if people are going to do it themselves. That calculator is critical. So it's really
so make sure you get your hands on that if you have not already. And I am keeping it updated. So as they change things, we do send out a new version to everybody that has it because we want to make sure that we're operating under the most updated guidance, which hopefully we're done with changes, but who the heck knows at this point?
You never know.
Now tell us the third one though, Kristi. What's the third way to qualify? Because this is one that's less talked about.
Yes.
But I think it's a really key one that people may think, oh, this does not apply to me, and they may be missing out. So let's talk about that one.
Yes. Okay. So this is a relatively new one. If a small business is considered a recovery startup business, they can qualify for ERC in Q3 and Q4 2021, even if they don't have a gross receipts drop or a partial suspension. And so, what is a recovery startup business? The key here is that the employer had to begin the operations for which they were intended after February 15th of 2020. So even if, let's say there was a business that incorporated in December of 19, but they didn't open their doors until February 20th of 2020, in that case, they would be considered a recovery startup business because they did not begin the operations for which they were intended until after February 15th.
Yeah.
So this is a huge opportunity for new businesses. I know there were a lot of businesses that started in 2020. People left their jobs. They tried to start a new business. This is a huge opportunity because you can qualify for ERC in Q3 and Q4 of 2021 under this recovery startup business guideline.
Yeah. And how much can you qualify for then?
So you can qualify for a credit of up to $50,000 per quarter with under recovery startup.
And that goes based on the number of employees that you have, but you don't have to have any kind of gross receipts drop. It's just a matter of if you started operations after COVID basically started, they consider you a recovery startup business because they're trying to get people back to work. They want to incentivize companies to hire. So again, you have to have employees that aren't yourself or your family members, right?
Yes.
But you can be able to get this COVID money even if you started a business after the fact. So this was kind of a surprise. Like, I don't know where this came from, but it showed up in the more recent guidance. We're like, oh, wow. And a lot of people have no idea that this is the case.
Yes, absolutely. And another important thing is it's always preferable to qualify under the gross receipts drop or partial suspension if you have a lot of employees because you're capped at that $50,000 under recovery startup. So you should always check and see, do I qualify under gross receipts or do I qualify under partial suspension first? And if I don't, am I considered a recovery startup business?
Yeah.
Now, an important thing to also note is that the ERC ends for most businesses in Q3 of 2021, but for recovery startup, it extends through Q4. So the only businesses to which ERC applies in Q4 of 2021 is recovery startup businesses.
Yeah. So that's recovery startup is only Q3 and Q4, right? Of 2021.
Yeah.
But for everybody else, they have basically, the post-COVID part of 2020 and then 2021 to potentially qualify, right? And you can qualify for just one quarter. You could qualify for multiple quarters, depending on your situation, but it ends as of Q3 2021. So that's something that has also been an evolution. It used to be the end of the year, then they moved it back. It's been moving all around, but it officially ended at Q3 2021. Now, how long? So that's the period we can qualify. How long do we have to claim this thing, though? So we're still talking about this. It's 2022.
I know.
So this is
yes. So this is pretty amazing. People actually have 3 years from the date that they filed their original 941 to claim the ERC for that quarter.
Yep.
So let's see. The first quarter to which this applies is your Q2 2020 941, which you would have filed in July of 2020. So 3 years from then, you have to file your 941X to claim your ERC by July of 2023 to get that credit. So you still have quite a bit of time. And then each quarter after that goes out further. So really, you still have quite a bit of time to claim this. I always tell people it's better to get it in sooner rather than later. But this is still a huge opportunity that's out there.
I tell people the same thing only because we have seen, not that they have said that money could dry up or anything, but we have seen legislative changes. If at some point they say, you know what, we're this far past COVID, we're cutting this thing off, you never know. Now, you'll always be able to, to file those 941Xs. The question is they could put a limit on claiming the ERTC specifically. So right now it just goes with essentially what the deadline is to file a 941X, which is a revised, 941, quarterly 941. That's, again, we're claiming it as a payroll tax credit. So you might be thinking of a tax credit as something you claim on your annual tax return. That's not what this is, although it does, which we'll talk about in a minute, it does impact your annual tax return in a unfortunate, confusing way. But the way that you actually claim it is through a payroll tax credit, not an income tax credit, right? So that's important to know. That's why it impacts the 941s. And yes, you do have to do it for each specific quarter, right? If you qualify for all quarters in 2021, you can't just revise Q4, right?
That's right. And there was some confusion on that in the beginning as well. So if you qualify for a quarter, you have to file a 941X for each quarter for which you qualify.
Yep. So again, they make it difficult, but it's worth it.
It is so worth it.
As people might have checked out and they've been like, this sounds like too much. Let's remind them how much this can be eligible. They can be eligible for through this.
Yes. Okay. This is a huge, huge credit. So for every employee that you pay wages to, and if you qualify in 2020, you qualify for a credit of up to 50% of wages paid to employees up to $10,000 of wages. So you could get a credit per employee. You could get a credit of $5,000 per employee in 2020. And then in 2021, it becomes even more generous. In 2021, you can qualify for a credit of up to $7,000 per quarter per employee.
So it's a total of $26,000 if you qualify for the whole 2020 and 2021. Most people won't, but some could. But it's not a small amount of money, and that's per employee we're talking about, right? So I know a lot of people who have kind of, because of the complexity, have walked away from it. Come back. It's worth it. Work with somebody if you need to, right? You don't have to do this all on your own, but it is something that you want to look at, especially if you think that you could qualify. So I'm a really big fan of this credit, and I know so many companies are going to miss out on it, and it makes me sad because I want them all to have it.
I know. It's a huge credit. Well worth it.
So what have you seen? We talked about the 941X, right? Which is your amended 941 for the quarter that you qualify for. That's how you claim this. What have you seen as the biggest issue that people are running up on when they're doing these 941Xs, especially if they're trying to do them themselves?
Yes. Okay. So generally, people are able to do the calculation themselves. They figure out the total amount of qualified wages and then the total amount of credit per employee. But then they get a bit confused when they look at their first 941X. So my recommendation here is the main issue people have with the 941X is that when you claim your credit, you have to split it between the refundable piece and the non-refundable piece. Now, to be clear, you still receive the entire amount of the credit, but the IRS wants to track what they call the refundable piece versus the non-refundable piece. And in order to calculate what that refundable versus non-refundable piece is, my recommendation is to go to the instructions to the 941X, which is on the IRS's website. And they provide a worksheet within those instructions. It's worksheet 2, and it will walk you step by step through how to calculate the refundable and the non-refundable piece of your ERC credit. And then that worksheet will tell you which lines in the 941X to put those numbers in. It's extremely helpful. I highly recommend going to that and using that kind of as your starting point.
Yeah. And we I'll link down below the directions to that 941X so you can find that schedule. You said schedule 2?
Yes. So worksheet 2 is what you will use if you're filing the 941X for 2020 and Q1 through Q3 of 2021. Yep. Then the IRS changed the way we calculate it in Q4 of 20. Why wouldn't they? Oh, I'm sorry. Actually, it was in Q3 of 2021, they changed the way we calculate it. So if you're filing a 941X for Q3 21 or Q4 21, you should use worksheet 4 instead of worksheet 2. So
it's just clear as mud, right?
Totally.
Again, you can get help with this. Kristi is somebody that helps people specifically with this, but I will link all of those things down below so that you can find them, so you can take a look at it yourself and see, what you think. But ultimately, it is just kind of splitting this into 2. You're still going to get both. There's just like this, technical way they want you to do it on the forms. And I know that can get really intimidating for people and can be a question that we get a decent amount of time. So let's now talk about PPP. We mentioned, yes, if you got PPP, you can still get this, right? And also same thing for Restaurant Revitalization Fund, right?
Yes, that's right.
Yeah.
So the key
what are
here,
some things to think about if you got a PPP or something like that, and you're also trying to qualify for ERC?
yes. Okay. So let's talk about PPP and restaurant revitalization. Kind of the same rules apply.
Yeah.
So the key is really that you can qualify for PPP and ERC in the same quarter. The key is that you cannot double dip on wages. So let's say you have PPP for the period from April 1st through June 30th of 2021. But you also qualify for ERC. That would be Q2. You also qualify for ERC in Q2 of 2021. You need to use $100,000 of your wages for PPP, but you paid a total of $150,000 in the quarter. So you need to carve out that $100,000 that you need to cover your PPP. And then anything above and beyond that, so the extra $50,000 can be used for ERC. The key here is really just to document it. So look at the total wages paid, clearly lay out which wages you're using for PPP and then which wages you're using for ERC so that it's easy to see that you're not double dipping.
And you do want to cross-check that then back to your PPP forgiveness, right?
Yes.
Because you filed and said, here's the time period that I use this over. So you can't go say, never mind, it was a different time period, right? And that's where I know, Kristi, you worked with people before filing for PPP forgiveness with ERC because that gave you the most flexibility because then you could, really think about both of them.
Yes.
Now you probably have already filed for your PPP forgiveness at this point, which is good, but you do now need to kind of consider what you put on there and then document. And I know it gets a little more complicated probably too because it probably spans multiple quarters and there can be some complication.
Yes.
But you do want to just put some documentation together that you have so you know which wages you covered with PPP and you can say, here's what I covered with PPP and here's what I'm claiming for ERC so that you aren't kind of the double dipping, right? We talked a lot about double dipping back in the day. And people said, what the heck is double dipping? But that's really the crux of it, right?
Right. Using the same wages for both programs.
Yeah.
That is absolutely not allowed.
Wages with PPP, then there's nothing to claim your ERC on, right? They're not going to reimburse you for wages that have already been paid, right?
Yes, exactly.
But with something else. So that's really, really the purpose of it.
Yes. And Jamie, that's such an important point too, to remember that you are beholden to the information that you included on your PPP loan forgiveness. Yes. You cannot change that. So when you prepare your ERC, make sure you have that loan forgiveness application handy so that you can refer back and see, okay, what was my PPP covered period that I used? Yep. How much payroll did I use? Yep. Because if you have, let's say you have a PPP loan for $100,000, but you only used 60% of that for payroll. So that means you only have to carve out $60,000 of payroll from your total wages paid in that quarter, and everything else you can use for ERC. So that's the key.
It's such an interesting thing, right? I always think about it from the standpoint of like cash is fungible. I could probably have like a theoretical debate on all of this and kind of what people probably feel, which is the ridiculousness, where they're like, well, shoot. So you're saying, because a lot of people claimed 100% payroll if they had it because they thought that was the easiest at the time. You didn't have to get receipts for all this other stuff. Well, then ERC comes along and for ERC, in order to be able to qualify, it's better if you use less payroll.
Yes.
And it's just like, it's all the same money, at the end of the day. It's
right.
a little bit of silliness, but unfortunately, that's the way they wrote the rules. And I could, again, talk a lot about my thoughts about the way they wrote the rules on this thing. And first, can we just real quick talk about the ridiculousness of this COVID credit that is taking how long for people to get? So those of you who have filed for this, or if you're about to file for this, here's what you should be prepared for. How long is it taking for people to actually get these refunds?
Yes. So it is taking between 6 and 7 months to receive your funds.
And I will tell you, I've heard stories of 12 months. I've heard stories of people who have waited a significant amount of time for this.
Yes, that's a good point. So the average, I would say, is 6 to 7 months. I have seen clients who get it
faster, but it doesn't really seem to be.
No, it's very rare that it's shorter than 6. But I've definitely seen people who it takes more than 6 to 7. I think the longest
funny is that we're in 2022, in the middle of 2022, And like if you file now, you may not get it until early 2023. So these are COVID tax credits that are meant to help businesses during a pandemic that they're getting multiple years later. So it's lots of thoughts, but
no, we all keep
on it because it's available, right? It's something that you can get, but it is a little bit backwards from what people really need at the time, which we know is cash to run their business. But that's really interesting. So yes, expect it to take a little while. Again, that's just kind of the name of the game of these things. They are taking a while. What should people do if it's been over that 6 or 7 month time period? What should people do to check on the status of this thing?
So I would say right around the 6 month period, if you haven't received, generally what happens is you receive a letter from the IRS and it says, we've reviewed your 941X and we're going to issue you an overpayment of X. And then you'll receive your check within 2 to 3 weeks after that.
Yeah.
If at the 6 month period you have not heard anything, I would recommend calling the IRS directly. And just asking them what the status of these 941Xs is.
Yeah.
And generally they can look and they can tell you where it stands in the review process and how much more time you should expect.
Yeah.
Now the bad thing.
Yeah.
I was going to say the bad thing there is you have to expect a wait. I've heard some horror stories, people waiting 3 to 4 hours just to speak to someone. So it's a process to get a hold of the IRS. You gotta time it just right.
Have nowhere to be for a while.
That's right.
You'll
have a lot of work to do. Just put your phone on the side on speaker while you just be prepared to be on hold.
Yes. Yeah. And I will put the number for the IRS down below too for anybody who needs to call and wants to check on that, which we do recommend because sometimes there also may be an issue, right? I think that's happened sometimes for people too, where there may be an issue. They're sending these in the mail, right? So how are people going to receive these when they get them?
Yep. So you'll receive a separate check in the mail for each quarter that you apply for. So you'll get, separate checks, separate envelopes. I generally submit all my 941Xs in separate envelopes just to avoid any confusion. And then you'll get separate checks in the mail for each one.
Yeah. I love the envelopes. We're sending envelopes still, y'all.
I know. So yes.
No wonder it takes so long.
There is no way to file a 941X electronically right now, which is hard to believe. But it's true.
It's not hard to believe for me. I mean,
yes. So you've got to file it, or you've got to print it out. You have to sign it. You have to physically mail it in. I always mail them via certified mail so you can track them.
Yes.
And then you just wait. You check your mail and you wait to get any news from the IRS.
Yes. And you hope. And then you celebrate on that day. Oh, and so the last thing I want to talk about with regards to this is what happens then when you get this. People are getting these ERC checks now, and they're wondering, what do I do with this? How do I record this in my books? What do I need? Do I need to go back to my tax returns? What do I do?
Okay.
So you probably filed, you're getting it for 2021, let's say, but you get it in 2022 after you filed your 2021 tax return.
Yes. Okay. So first, let's talk about how you would book the entry. So from a journal entry perspective, you get the cash. You would debit cash, you would credit payroll tax expense. So basically, like we've been saying, this is an offset to not payroll tax expense. Let me correct that. You will debit cash, credit payroll expense. So you're going to reduce your salary expense by the amount of your employee retention credit. And that's really important to remember. And then this is the unfortunate thing. The IRS has come out and said, if you get an ERC credit for 2020, even if you don't receive that until 2022, unfortunately, you have to amend your 2020 tax return to reflect that reduction in wages for 2020. So there's been quite a bit of confusion there because even people who file on a cash basis, they say, well, I didn't receive my cash until 2022. You still have to amend your 2020 income tax return to reduce those wages by that employee retention tax credit.
Yeah. And that usually is going to mean, and this is the unfortunate thing, right? This is this round robin effect that usually is going to mean your taxes are going to go up and you're going to owe on your taxes, right? Because now some expenses that you deducted related to salaries, the wages we've reduced that now, right? So maybe you said you had $100,000 in salaries, but you got a $50,000 ERC related to 2021. Now you're going to reduce it. So now it's only going to be 50,000, which is going to increase your profit, which
Yes.
is likely going to make you now have higher taxes that
Taxable
you're
income
have to pay.
in 2020. Yes.
Yes. And I assume then you're going to have to reissue like K1s and things like that too, if you're a corporation.
Yes, I think so. So everyone was a little surprised by this news because it creates a lot more work in terms of needing to amend your income tax return. And it also creates more work on the IRS side because now they've got to review all of these amended tax returns for 2020. And the same rule applies to 2021 as well. We didn't talk about 21, but if you get a credit for 21 in 2022, you've also got to amend your 2021 tax return.
Yeah. So, I mean, this is where, and those are getting 2020, you got to go back. So it is work. Again, you probably want to work with somebody. This is going to be easiest if you have an accountant who can help you with making sure that you are keeping up with all the requirements of this, right? Again, with all this though, I want to ask you, and I know your answer, but I'm going to ask you anyway. If people are saying, is it worth it though? Is it worth all this work?
It is so worth it. I mean, no matter how big your business is, if you have employees that are not family or owners, it is well worth the effort. We're talking thousands, tens of thousands of dollars, depending on how big your business is. It can be hundreds of thousands of dollars. These are huge credits that we're talking about, and it's well worth at least taking a look to see if you qualify. At least take that step and just confirm whether or not you qualify. And if you don't qualify, at least you know. But if you do, it's 100% worth the effort to pursue it. This is a lot of money. Agree.
So again, with finding out if you qualify, a great place to start is the ERTC calculator that I have, jamietrull.com/ERTC. You can grab one for yourself. But I also want to highlight you, Kristi, for how can you help people if they're saying, okay, this sounds great, but like, what the heck am I supposed to do?
Yes. So I offer consultations. Really, I offer either consultations or I can help you with the end-to-end process. So I offer 15-minute, 30-minute, and 60-minute sessions to just walk people through any questions they might have that are specific to their business. And if you don't even want to deal with it and you just want to hand it all over, I also offer that service where I would document your qualification. I would build your ERC calculation. I would help you prepare your 941Xs. That's really the end-to-end service that I offer. So I can do anything from just answering a few questions to helping you with the entire process if you need it.
Love it. And I think that's super useful for anybody who's like, oh, thank goodness.
Yes.
I've sent lots and lots of people to Kristi. Everybody has told me how glad they were to work with her. So I highly recommend it if you can get on her calendar. So check it out. That link is obviously going to be below to book a consult with Kristi so she can help you with this. And I will say this other thing, just because I've seen a lot, there are other firms out there. If you look for somebody to file your ERTC for you, there are a lot of companies that are doing this, and they do it on a percentage basis where they say, okay, I'll do this for you, but then we're going to take like 10, 15% of your credit. And
even 20%.
Even
20%.
I mean, so, like I've seen astronomical things.
Yes.
Just beware.
Yes.
I do not recommend working with those because you're paying a lot of money potentially, right?
More money than you need to. Yes.
More money than you need to. You do not need to pay that amount of money most of the time in order to get quality help and service that you need, right?
Yes.
And sometimes,
that is exactly
and remember, even though like you're still going to have to pay taxes on this money. So you want to think about that too, right? This is not taxes on the money. I shouldn't say it that way, but it does impact your taxes, right? Because it's going to reduce, like we talked about, your deductible expenses. So there is a tax impact to this to be considered and to be aware of. And I think that's something good to know when people are getting these checks in the mail, right? To think about that before they kind of, use it.
Yes, exactly. You really should carve out a portion of it for your taxes because you know that you're going to owe that. And technically, I think what the IRS wants you to do is when you prepare your ERC, technically, once you know what your credit is, you should really be booking that journal entry at the point that you know you'll be receiving it. So once that calculation is done, technically you should be booking that journal entry to say, I have a receivable coming, debit receivable, credit payroll expense. And then when you get the cash, you debit cash, credit receivable. So technically you should probably amend your tax return as soon as you know that you are due that ERC. Now, for some people, they don't have enough cash at that point in time. So it's really a decision that you need to make for yourself. But the technical,
that's the challenging part, right?
Yeah.
Because if you were amending your tax return before you've gotten the money and now your tax bill went up, now we're actually, not only was this meant to help the pandemic, now we're actually putting people in more of a cash crunch upfront. Like we're doing the opposite. Like what is going on here, right?
I know. It's like, really hard to wrap your head around. Yes. And the thing that's not clear is the IRS going to penalize you if you don't pay up front?
Right. Is this going to be something, and that seems crazy to me that they would assess penalties on this, but like who the heck knows with the IRS, right?
I know. Yes. So
you just don't know. It's money. Most of it is going to end up being money in your pocket. So worth it, but there are some things to be thinking about, when you're going through this, which is why we do this, why we want to educate. We want everybody to be prepared for what they're walking into. So I'm going to make sure to include this out. I think this has been a really good session, a really good Q&A, that I'm going to send out too with people who are buying that ERTC calculator, so that there is an understanding, of these frequently asked questions, because I do think that it's hard to find the information in a really easy to understand way. Let me tell you.
Yes. And that's what I hear that from so many people too. They get overwhelmed. They don't know where to go. Yeah.
And I will say, I forgot to do this disclaimer at the top end, so I'm going to do it now. So both Kristi and I are CPAs, but we're not your CPA. Of course, right. Unless you can hire Kristi, but we're not your CPA. So make sure, we're just doing this kind of to educate the public, to make sure people know and can empower themselves with the knowledge that they need in order to get the help that they need for their business. That's really the reason that we are doing this. It's kind of a public service to say, hey, this exists out there and we want people to know about it. And I feel like I've been shouting it from the rooftops, and every single day I find more people that have not heard of it and haven't taken advantage of this. So I just want people to know about it. It is a really, really great credit that you can still get. So let's not leave it on the table, even though it's complicated. Let's go ahead and grab that. And if you want more information, if you are still wondering more about the calculation information, again, I have a whole playlist on the ERTC with updates and things like that have happened over time. Hopefully we're done with all the updates. I'm hoping.
I know. Fingers crossed.
We're done. We'll see. It's been quiet for a while, so hopefully that means good things. But thank you, Kristi, for coming on. This was really helpful. I know this is going to be so valuable for so many people that watch this.
Oh, thanks so much for having me. This has been great.
We appreciate you so much. All right, everybody, I'll check you next time. Everybody have a great rest of your day. Make sure to check out that playlist that we have. Grab the checklist, book your consult with Kristi. Check out all the links below, and we will see you next time.